Hey everybody, and welcome back to another video. In today's video, we cover everything to do with the stock, crypto, and commodities markets in what has been a wild 24 hours of price action. Every market seems to be selling off, and there's a lot of reasons why. Inflation, the highest in 40 years. The Fed coming out and accidentally saying some stuff that the market didn't like. And then on top of that, we now look towards the next big news events. Will the market start to crash? Stay tuned to find out more. Well, it's the 10th of February 2022. The market's closed and it looks like we've got a bit of a bloodbath on our hands. And let's take a look at some of the deep things that Wall Street was doing throughout the session. We will be covering off on some deep dives into the CPI. Then we'll be talking about some of the key indicators that we're looking at, including interest rates, and then going through stocks, indices, and of course, cryptos and commodities. Let's quickly start with what happened to the big stocks though. Apple down 2.36%, Microsoft, all the big tech stocks, and even Tesla struggling with that 945 level that we've been discussing in some detail here on the channel. What was more interesting was the rally we saw in the morning. So the market news came out 8:30 a.m. New York time, then the market opened and it actually rallied off its base and almost went positive. This is a classic Wall Street trap. I don't know how many times we need to reiterate it, but the first hour is always retail in terms of the way that everybody's trading. And what ends up happening is there are a lot of reactionary trades that you can make based on traps that are set here. It certainly did happen, and all of those gains were shortly wiped off with the market selling off into the close and the markets being down as much as 2.5% at one point there for the Nasdaq. But the full story comes down when we take a look at the sectors. Things like jets, which we've been following heavily here, actually they did okay, but semiconductors were down 3%, technology down 2.61%, also REITs down 2.85%, so that's real estate going down. The interesting one for me though was utilities, down 2.5%, often seen as a bit of a defensive sector. It was getting bashed around, and a lot of this comes down to this CPI result. Let's take a look at that in some detail now. 0.6%, of course, up from where they expect, and it now gives you an index of 7.5% for the 12 months ending January. That is the largest 12-month increase since the period ending February 1982. Yeah, 40 years ago was the last time we saw inflation like this. And when we take a look at the inflation numbers, it's pretty much across the board. It's everywhere. It's like almost like a contagion when you look at it this way. Things like, of course, electricity, energy services up 2.9, a pretty big number there. And we had, of course, our big rise in things like fuel, which we expect because US oil, if you've been trading it or even watching the market, you knew they'd gone up a lot. Food increase as well is something that's a little bit scary because everybody, it's a basic necessity. And when you see these costs going up, obviously you need to look at, okay, what's the monetary policy going to do about these? Here's where the market got scared. And it was the Fed Bullard's comments. He says, does not think that a 0.5 point rate hike really helps us. Wow. So in an interview, that's not only saying, okay, cool, we can go hard, but we also don't think it does anything. And the markets have priced it in. So in the previous video that we did, we talked about a 50 basis point rate hike that we expect to see coming into the March period. It's now been basically 100% priced in. So that is 2 rate hikes for March. The market expects it. If it isn't like that, well, there could be a lot of volatility, but it is priced into the charts. And we saw a huge spike across all of the yields and everything was going crazy, and we'll take a look at that very soon. But I still want to bring us back to the data just quickly. We've reported on this one in previous videos. We've talked about midterm election years and the fact that this is a very big year because it's not just a midterm election year, but it's also a year that we're seeing rate hikes and obviously seeing some instability in the markets. They're not notoriously good years. You'll notice here, if we take 2018, 2014 and what we've got so far, it's basically pointing to it starts and it ends at the same point, but the fight in between can be extreme. And I think it's going to symbolize really more, or the similarities are going to be there with 2018. A sell-off in the first quarter, followed by some form of rally, because the market will be looking 12 to 18 months in front and it'll think some things might be sorted. and then the reality might come back to bite and another sell-off near the end of the year. That's what's happened every other time. It makes sense. You've also got the instability of the midterms around this point. So I think this is one of the really big characteristics of this year. It's a trader's year. You'll be able to invest in quality stocks. You'll be able to find good price, but just never lose sight of the facts. And these go back to 1950 as well. Yes, things might be different, but at the same time, stats do hold up to a degree. And what it's been telling us the whole time is this is going to be a trader's year. We always knew it. Up, down, and all around. Lots and lots of volatility, potential bigger selling here in the first quarter, coming into that 50 basis point rate hike, and then maybe some stability for a little while until we get some extra sell-off pressure. The big thing I think that we need to watch though is whether we see something happen at the end of the year. If we're sitting at 20% down or 15% down in markets or even 10, and you see a turnaround, the stats would say come Q4 into Q1 of 2023, we might get a really, really big turnaround. Let's talk about earnings. It's not really a fundamental problem here. I mean, beat rate is still incredibly high. This is off the street's expectations. Beats 645, misses 223. All right, well, it's about time we got into the charts, and let's begin here with the VIX, the volatility index, or the fear index as many people call it. We got a bounce off 20. Now, we kind of expected this to actually happen either way. If you were trading the VIX, even if the result was, let's say, positive and the market went up, remember the VIX can still spike off volatility itself, whether it's positive or negative, it just tends to go with negative. So it was a pretty good chance that it was going to go up. It certainly did. You got a nice spike of around 20% on this one. And if the market continues to make new lows, and we'll show you some of the key levels today in the video, then we expect this to go quite a lot higher. The VIX will probably spike even further based on that. Let's take a look at some of the things that are freaking out the market right now. A 1.6%, yeah, you heard that, 1.6% 2-year. That's jumped from 1.35 yesterday. This is a big jump in yields, and it's not just in this. I mean, it's over all of them. And one of the key factors that many people look at, which is the 10-year yield, that's gone over 2%. To scroll back and just to show the reality of how important that is, take a look at this. We haven't seen these numbers for a while now, and we know this was a critical level. Everyone that I was talking to in the industry was mentioning this level. So this is a huge crack here. We've seen times where yields have gone higher, e.g. 2017 to 2018, and then they started rate cutting. And I kind of expect this is maybe the scenario we end up seeing from the Fed. Maybe they go like lots and lots and lots of rate hikes, and then they end up having to cut a bit to try to stabilize the economy. They did it over here. Obviously, there was other reasons as well. Maybe that's something that does occur. But either way, 2% plus is a big deal. And now we look to the price action of the QQQ, so the Nasdaq, the S&P 500, to show us whether this market is going to react negatively towards that. One of the key things that you'll always be looking at, bring back the 2-year, go back to the 1-hour chart, and if this, or daily chart, if this particularly turns around and we start to see this actually lowering, it could be a sign that the temporary bottom is in. So just remember, the 2-year is super important. Now, what did this end up doing to the market? Well, it caused the dollar index to spike relatively hard, and it actually put pressure on gold versus US dollar as well, which we'll take a look at soon. And we got here that 95.80 level being put under pressure. No close above it yet, but certainly a significant zone that we talked about in the previous session. Gold also ramped and then sold off, and same with silver. It got above the 1830, it then sold straight off back into that zone, and now it's holding around where previous resistances might act as support. So watch gold, but it'll be a little bit weird because really when you're trading gold right now, some of the better trades for gold are going to be in the cross currencies. So this is when you go and look at things like gold versus yen, or gold versus pound, or gold versus euro. That's going to be where some of the better trades are, just because of the strength of the US dollar possibly coming out of this new rate hike kind of scenario. Let's move over to US oil, still in the middle of nowhere. We won't spend much time on this. Long leg doji, high, low, open, close. We know that means indecision. It may be a little bit of reprieve for the markets as well if oil starts to drop off a bit. The biggest indicator that it might do that is really just its length away from the 20 moving average. It's so far away from that, and that is the big issue. When you move away from the mean, it means that eventually you've got to go touch that, and that can mean price stagnation for some period here. Let's talk about Tesla. Stocks were moving hard, and Tesla was one that has actually had a terrible week when you think about it. It had the hanging man, it had the rejection candle, it had another rejection, a long leg doji, which we reported on, and probably a very good day trade if you were shorting off on the market, because whether you were shorting the QQQ, the S&P, or anything in the open after it rallied to those resistances, they were all very tight stop loss style trades. You may have only had to have the stop loss oak here, and of course by the end of the session we ended up seeing a big decline in the markets. Part of this rally, I believe, was probably just people that were shorting, covering, taking profit, and that was probably why we saw that small rally near the end of the day. So what's next for Tesla? Well, of course, any break of 950 is going to be a huge deal to the upside if that is possible. And for the negative side, this is a bad looking candle. So if we continue down, which we expect to probably do so, hit around that 880, this is going to be where we find support. Now, there might be some buyers, at least temporarily, but if this level is closed below, expect Tesla to move to 800. I don't think that's going to happen in the Friday session. There are a lot of reasons why, and a lot of it has to do with options and where they're expiring on the SPY as well, which we'll take a look at soon. But yeah, Tesla certainly moving quite a lot. Let's take a look at ARK. What was happening there? Well, ARK was moving and it moved to the downside. Another rejection candle off the 20 moving average. It just shows you why it's so important to wait for confirmation when you're trying to get breakouts. Breakouts are probably one of the hardest trades in some ways because they're so often misinterpreted and there's so many fake outs, as we call them, in this particular type of market. The trend line held. We ended up getting the sell-off directly off that, and of course now we have a shooting star style candle. A new low on these stocks in the next session could lend itself to quite a lot of shorting coming into the market, and it's tough to short this, but certainly that's what this chart is telling us. No buying yet here, or no strong buying on the long term for the ARK style stocks. Let's move over to Microsoft. Now, this is a stock that we always see as being pretty positive in the markets. Two things are happening here. We've got Apple doing something similar. That rally that happened off the great earnings is now coiling and consolidating. And what you'll notice is that Microsoft is showing this type of pattern where if it weakens through here, all of a sudden we're breaking that trend line that's been holding now for such a long period of time. And we could potentially be looking at some serious shorts. Because remember here, this trend line held up. And yes, we had the earnings, which put pressure on it, but this will be the first time it just floats through, plus the daily 200 moving average. Apple's the same. Double top formation here, very possible. Weakness coming through the next market, all of a sudden we see Apple selling off. These are the two big stocks in the market. They are showing bearish signs. They're not exactly saying, hey, yeah, we're going to go into a new long after that last 24 hours of trade. And this is across most of the markets. IWM just proves itself again as why it's a little bit scary to trade any type of breakout on it. Remember, SP500, QQQ, Nasdaq, they're the ones that you want to be really showing the way for the market, not so much this one. It rejected, created a shooting star, another kind of bearish sign here in the markets if it gets the follow through. Let's talk about the major markets though. We'll start here with the QQQ. Big rejection, filled the gap that we maybe suspected could have happened, which was that gap up, and it kind of looks weak. Where's the next level? 352, 353. That is the previous resistance becoming support. So if we break down this market using the Nasdaq, let's take a look here at the 2 hour. And what you'll notice is that's exactly where the supports are, around that 14.5 level. So 14.5, if we get down here, what do we expect to happen? For day traders, they're going to be looking at it very carefully. Do we see lightning bolts? Do we see double bottom or accumulation patterns here? Do we see some sign that maybe we want to buy out or buy that dip? Certainly a valid case. If it closes underneath here though, we get that significant drop off to 14,000. This is what we call like a critical level. It's very important how the markets react here. And for the Friday session, it would be surprising to see it break this zone. And again, the SPY will show us the way with options. Surprising, not impossible. So resistance was met, gap was filled, market at this stage looking negative, but we clearly have on the SPY the scenario of both the bulls and the bears. If the bulls get it ever past here, guess what? You'd be wanting to buy, and you'd be wanting to buy fairly heavily up until that 473. Now that's not what the scenario is right now, but the story would be incredibly significant because we have the rejection candle. You'd be snapping that off and saying all of this was fear. Here's where participation comes in, and the next zone would be up here. So that's the bull case scenario. We've also got the chance of this 445 area becoming like a little buy. Again, similar to the Nasdaq, they'll hit at the exact same time. Notice how the markets are interconnected. Of course, they're all going to hit the key supports at exactly the same period. And a close below this level, so a close below this level, all of a sudden exposes a big zone. So that's going to be that 430 area. And that's what a lot of people are going to be freaking out about. Double topping this zone across most of those indices, and all of a sudden we close underneath and we move towards the 430. That's going to freak a lot out, and I can absolutely see why. How it reacts to this zone will show us whether it wants to go further or not. And like we always say, when the VIX is above 20, we need to be fast, we need to be nimble, and we need to be quick. Have your take profits, have your stop losses. It's a day by day, hour by hour type of trading environment at this stage. Algorithms are everywhere, and that's why it's so fast. Let's take a look at the options and why we kind of we have some suspicions over whether the market can actually go any lower than that support during the Friday session. One of the big reasons is because there's so many puts. And there's a lot of puts specifically around that 440. So we think 440 is going to be a big zone. And this was taken from the Wednesday session. Let's have a look what happened during the Thursday session. A lot of calls were opened and a lot of puts were opened. And the puts specifically were targeting around that 445, 440. Again, we go back to the SPY. What was it telling us? It was telling us that this is the zone that we expect to find some form of support. So the perfect thing for market makers right now would be actually to close it right around here. And if they could do that for the Friday session, believe me, they're happy and they're getting the lobster lunch on Saturday. They're getting the bonus because they've done well at stealing everybody's money for the week. That would be pretty nasty, but it looks like the most likely scenario, and we've been reporting on that most of this week. Keeping it in this range is the most profitable thing to do at this stage. Let's move over to the crypto markets. All the alts really got a lot of hammering put on them. Alts suffered worse than Bitcoin or Ethereum. The two big ones held up surprisingly well. And 46,000, this red box here, continues to be the big problem. You'll see the sell-off. It came with the rest of the markets. The Nasdaq seems to be kind of harmonious with Bitcoin here. We see the resistances. We obviously do not want it underneath this long leg doji over here. And if it does get underneath the 50 exponential moving average, the blue line on the daily, which is sitting around 42,800, 43,000, you'd have to think that Bitcoin is going back down. At this stage, it actually looks better than a lot of the markets do because it's holding around this area, and the bull case is just anything above 46. Fantastic. The bulls are back and this market can be separated from the rest. It's the same with Ethereum, testing around 3,000. Psychological number, obviously a break below would be negative for the markets in this case. So the market looks ahead now to next week, and I think a lot of this comes down to we've got PPI on Tuesday, which is 8:30 a.m., but the big one is going to be this. And unfortunately, this is the market we're in right now. News. All news is now important. That's red. And FOMC meeting minutes, 2 p.m. next week on Wednesday at 2 p.m. New York time. So this will be the important one. Definitely stay tuned here on the channel. Make sure you subscribe, smash that like button if you enjoyed the video, and we'll be reporting on all of this and more. It's an exciting time in the markets, but also a little bit scary for some. So remember, be fast, be quick, and on top of that, if you're making investment decisions, have your conviction either way. Bye for now.